Alright then, so in exercise 5-7 what we're asked to do here is prepare the closing entries. So the required says prepare the closing entries. And you'll remember that the acronym for closing entries, to remind you how to do that, is REID, standing for revenues, expenses, income summary, and drawings or withdrawals. So we're actually going to prepare the closing entries for this, and we'll start with the revenue accounts. Remember, closing entries are those that just zero out accounts and prepare them for the next accounting cycle. Now, if you don't recognize the acronym REID, it means you didn't watch the earlier video, and you should probably go and do that right now. Alright, so we're going to start with the revenues. We have this list of accounts. There's a whole bunch of them in here, and they're presented to you in alphabetical order, which isn't particularly helpful. It would be nice if they were grouped by account type, but they're not. They're alphabetical. So we'll need to scan this list and look for the ones that are actually revenue accounts. And very quickly we can spot there's an interest revenue account and a subscriptions revenue account. And those are the only two revenue accounts in the list. There is an account called unearned subscription revenue, but remember, unearned means we haven't earned it yet, and if you haven't earned it yet, it's not revenue, because revenue is what we earn. So those are the two accounts we're going to zero out. So let's see what those journal entries actually look like. So the closing entry is a journal entry, just like any other journal entry. And so let's just talk about, before we actually do the journal entry, I'm not going to use journal paper, I'm going to use journal form, but not actual journal paper. So what we're going to do then is take a quick look at what that account called subscriptions revenues actually looks like. So let me put a little T account here. Subscriptions revenues. And it currently has a balance of, I think, $62,000. Yes, $62,000 on the credit side. $62,000. Now remember, revenues, if we remember all crew, revenues normally have a credit balance, or normally credit, which means that credits make it go up and debits make it go down. So if we want to zero out this T account, it currently has a credit of $62,000, we'll need to debit it for $62,000, and so what we'd like is a debit of $62,000, and so now when we take the balance of that account, we end up at zero. So that's what it's going to look like once the journal entry is put through and posted. But what does the actual journal entry look like? Well, every journal entry starts with a date. So what would be the date of this journal entry? Well, let's go back to the question, and it says, following is the adjusted trial balance for the accounts for KRG Television as at January 31st. So January 31st is the end of the period, and that's the end of the period is what we date our journal entries, our closing entries. So let's date that January the 31st. Okay, and the account, first account we're going to debit then is subscriptions revenue. Revenues, and we'll debit it for that $62,000. The other revenue account was interest revenue, and it's got a balance of $450, so let's debit that then, because it takes a debit to zero that out. Interest revenue, $450. So we've got the date, we've got our debit accounts, and just like every other journal entry, a closing entry, the debits have to equal the credits, and so the account that we debit in this case is income summary. Now, if you're not familiar with what the income summary account is, once again, it would suggest you haven't watched the earlier video, and you should probably go and do that. So we credit income summary for the total of the debits. And the description, because you always have a description, is to close or zero out the revenue accounts. Okay. So we should do the same thing for expenses. So why don't you have a look through the list, find the expense accounts. They normally have a debit balance. You're going to credit them all. You're going to credit all the expenses and debit income summary for the total of that. So have a crack at that and meet me back here in the next video, and we'll see how you made out.